The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We are going to take a look at some of these markets today that we've been following, the Australian dollar, New Zealand dollar, copper, gold, and a few others because they're getting it to be critical levels. None more critical than the U.S. dollar index, folks. It is hanging on by a thread, and that thread is soaked with WD-40, so it's very slippery. It could go down the slippery slope into a bear market, so we'll take a look at that in a little bit. But first, we look at the DAX, then we can see the FTSE. You've noticed those are still holding up in a tight trading range here into the weekend of Thanksgiving, which is a shortened week, actually. Not much happens on Friday, but it is supposedly the most positive closing day of any day of the year. In other words, it closes higher on Friday better than 70% of the time are the statistics that I've seen. I haven't verified that myself, but I've seen it from Neil Hirsch and a few other people who I respect, so I assume that's the case. It's usually extremely light volume the day after, but by golly, things can happen on those real thin days because thin markets can lead to really big aberrations. So I'll probably be around looking at it. TFNN is going to be closed, but it'll be fun to watch how it transpires anyway. Now, I had a couple questions about the gold market, and I think what we'll do is we'll just go to the gold market first, folks, because I think this is, and I don't know if this is the case or not. I'm just giving you the patterns. That's all I can tell you. But here's where we are. You'll notice here that we have been going up. Our bottom was made down there in December of 2016. So we're in the fifth year of the bear market. And that usually means you're going to have a pretty good correction. And I think this is what we're looking at right now. Just looking at the ABCD pattern here, we're trading at around 865 this morning. Tells us that we could get down to 1740, the 1700s, 1717, something like that shortly. Now, for the 24/7 folks, we sold short at that 382 up there at 953, and then we added another one on the second 382 at 1895. And what we're trying to do now is to stay with those two positions and add another one if we get below the below the 1846 level. And we've already mapped that out in a video that, we don't want to risk very much. And in other words, if it breaks that level, it has to break and continue down. So that's what our plan is. And believe me, it's not easy to follow through here because you're sitting with about $120 gain in gold, and you hate to give any of it back. But the way we do that is that we put our stop now at our second position, which is at that 1895 level. And if it gets there, then we will say thank you very much and move on to the next one. That's really what we're looking at. Now, over the weekend, I sent out a special report on a video that there was a potential for the grain markets to be making a top. I alerted us to the fact that, we were at a very, very critical level, and they had to open just slightly higher to lower on Sunday night for this to work. And, of course, that's not what happened. We'll put this up here to take a look at it. This is what the report was from Rich Anderson Sunday around 5 o'clock New York time. We got this from Ag Resources telling us that the markets were going to be higher. And, of course, they did open sharply higher. The beans opened up 18 cents. Corn opened up 8 cents. And wheat opened up about 10 cents. So that was telling you that pattern that we were looking at was not going to work. That was basically market feedback coming from that. And so I sent out a little alert saying, no, we're going to cancel this to wait and see if we were going to see this. Now, with that new news, as bullish as it was, if the market didn't react well, that was still going to be a good trade, because if you've got really good news coming in there and that market doesn't react to it with that type of pattern, holy moly guacamole, those can be really, really monster moves to the downside. So that's what I'm trying to do with 24/7 is to update these as quickly as possible so that we'll be able to see some of these unfold. Folks, I try to focus on how much money to lose, not how much money you're going to win, because you're going to have winners along the road. There's no question about that, and you're going to have losers. So what you want to do is focus on your losers and not worry about what your winners are going to be. And if you keep that in mind, you're going to be fine. That's why when you look at sports, you notice that teams that have great defense usually do better than teams that don't have great defense. In baseball, they always say that good pitching beats good hitting, and that's pretty much the case, because if you listen to great hitters, they always talk about the great pitchers that they faced and why they were so tough. And so that's why you want to keep a mind on the defensive part of your game and watch that. Speaking of defense, folks, we are going to have a very special guest. I've signed her to a long-term contract. And Adrienne Togaray of Trading on Target is going to be our guest tomorrow at the 9:30 time frame, and she's going to be talking to us about something that's happening to a lot of people along with this with COVID virus. It's not in the news too much. A little bit it is, but not much, and that's about depression. And also traders go through this too. So I think it's important that we listen to her tomorrow, and she's always very entertaining and extremely good. Those of you that don't know who she is, she's been around for a very long time. She worked with Van Tharp for many years. And she was also a good friend of Mark Douglas, and we had been at many conferences together, and I've listened to her, and she really knows her stuff, and she's got some great materials that you can use to help you get your head screwed on straight if the screwing on process is a little weak. And in this case here in Tucson, Arizona, there's always room for WD-40 on the nuts and bolts, because you got to keep the main cycle, which is that 9-inch cycle, in place. So keep that on mind. David just posted her website, www.tradingontarget.com, and and thanks, Duffy. And so she's very entertaining, and gosh, she really knows her stuff, and she's got some wonderful things, some free things that you can use, to kick the wheels and see how well you pass some of these things, because it's a thing. After you're doing this so long, you sometimes forget that some things are happening. Now, getting back to that grain trade, I wanted to show you here. These are the long-term. This is a corn prices on a weekly basis, going back over the past year. You notice that we've just completed equal moves with those two big red arrows. That came in at the 430 level, you see, and today we're trading around 435. So we looked like we were going to go down, but we gapped up Sunday night, so we want to wait to see. This could still be a good trade, but it's got to start down after the bullish news. So that's it. You can see the big ABCD pattern that came down in March when we were about 295 in the corn, yelling and screaming. This looks like a bottom. It looks you had a double bottom down there, acted pretty good. So that's it. But the one, if you're going to sell one grain, and I'm not saying that you should be doing that, but if you'll take a look here at this wheat chart. Now, this is the weekly chart, weekly continuation chart of wheat. And you'll notice here that we have this incredibly beautiful 3-drive to a top pattern in here, following the parallel channel so nicely. So that's the one we're watching if we're getting ready to short. You want to short the weakest, not the strongest. That's part of that defensive game. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I think we have Mr. Z from Philly on the line. John, how are you?
Larry, I am doing very well. Thanks for taking the call. How are you today?
Still living the dream, baby, on the green side of the grass. One more day.
Living the dream. I like it. So, Larry, I wanted your help, please, on Bitcoin. Bitcoin is currently trading, I see the cash price at $18,600 as we speak. It was back on November 11th, so 2 weeks ago now, that Bitcoin surpassed the Fib 786 resistance mark that I had calculated just under 16,000. Friday's high came close to testing the December 2007 all-time high. So we're right up at those highs. My question to you, sir, is would you share with us your chart work that would tell us what the higher projection is, given your techniques, if Bitcoin surpasses that 19,200 mark, which was that peak back in December of 2017. Looking for the higher targets as you see it, should this rally extend, please?
Sure, John. I've just posted a chart for Bitcoin going back to 2018 in January when we hit 19,900. We went all the way down to 3,300, if you remember, back in 2019. Everybody said, that was another bubble. And Mr. Jameson, who helps write, he does write our newsletter every week, and he specializes in Bitcoin and some of the other things about blockchain over the weekend to tell us that this is really just the beginning of this, folks. John, people, by the way, the target that you're looking for, the first one we're looking at is 30,000. That would be a 1.2 0.27 expansion of that whole move down, where we went from 19,000 down to 3,000. You see, that'd be 17. That's 17,000 points right there. You just add that to there, and you're almost at 30,000. You see how easy that was?
So the way you work with markets that are going, I'm incorrectly saying going crazy. Markets that have gone very volatile. Your speculation is that if we surpass that high, the 19,200, or I think you quoted 19,900, depends upon what data sources we're using, but same general area. Your hypothesis would be that if that's surpassed, you most likely run to the fib 1272 expansion target. Is that the idea?
Yes, sir. That's what I'd be looking at. Now, we've had a vertical move now since, late August, and that's when we made a 382 retracement down there at 9,800. That was also a 61% retracement of the low in July. And so that move in itself, that move right there, takes you to right at the old high at 20,000. There'll be some resistance there because of double tops. People will look at that. But, this is more and more people are getting involved with blockchains, and it's about blockchains. It's not about cryptocurrencies. And so that's why, we're watching it so closely. We're going to try to add a few things in the newsletter every other week or so, and maybe even more as it becomes happening. But this is the beginning. This is like the internet in 1986, is the way John Jameson, explains it to me. And those of you that have had a chance to listen to John, and John is like he's like Thomas Jefferson. If you remember when Kennedy was saying one time at a meeting, he said there hasn't been this much brain power in this room since Thomas Jefferson dined alone. So that's pretty much when you're listening to John Jameson, you're dining alone, because he is really, really smart. And so he reads and says he reads like 5-6 hours a day and retains it. So that's what we're looking at technically, and we're going to try to follow some of these other blockchains and Bitcoins, because this is a changing technology. This really is. It's here to stay. I mean, it could end overnight. China could get together with the United States and say, hey, we're shutting it all down. But that would be really difficult because of the open source that they have here. So that's what I'm looking at. Anyway, 20,000 is the next resistance area. I imagine we'll take that out by a little bit, and then we'll find out what the retracement. We mentioned in the newsletter, John, that since Bitcoin really started going back in 2009, it's had 4 major corrections, and all of them have been just about 38%. The one that we made back in 2019, if you looked at it on a log scale, it was exactly 38%, because when you got something that's trading for $50 and it goes to 19,900, you got to look at it on a log scale, and that log scale retracement was down there at. So that's what we're watching here.
Great. Thanks so much for that. In parting. In addition to thanking you, I'm going to ask a special request, not necessarily today, but perhaps in the next couple of days, is that you start analyzing the wave patterns and price structure on the soybean chart for November 2021 delivery. In other words, the new crop contract that won't be planted till next May. I'd be very much obliged if you would give us your Pesavento patterns, your projections, all that jazz for that contract, please.
Does it have enough open interest to even count, John?
Absolutely, yes. Unequivocally, okay. Yes, absolutely.
Yeah, sure. Yeah, what I'll do, this is right after we have the break. I can certainly do that because we don't have a guest today. I'll be happy to do that for you.
Thanks so much, sir. You have a good day.
Have a wonderful holiday and be safe, and I hope your mother's doing okay.
Very good. Thank you.
You bet. Mr. Z from Philly. Folks, let's take a look here at something about the old Stop and P here. Everybody likes to look at the old S&P here. We'll take a look at it. Get up here in a second there. You'll hear you'll notice here that we've been at, this is going back to the 16th of November when we made our high on that recovery. You notice that all of our retracements, there's been 3 of them, have been right at the 382, right around that 35 35.79 to 35.80. The high was 35.86. The overnight high last night came in at 35.79. So this is telling us that there's major resistance there. If we can get popping above that, and believe me, folks, this has been the market's in a bear market here for the last 5 days. You can see that we've gone from 36.37 all the way down to 35.40. We dropped 100 handles, which is nothing anymore. And all of our retracements have been 382. You can see them right there. They're spot on. You don't have to be a fundamentalist to pay attention to that one. So if we can get it closing above that 35.80 level would be a good sign. And then we'll be able to see if that's going to be the case. So we need to pay very, very close attention to that. That's what I watch overnight, is to see how these things line up. So that's pretty much it. So we got a break coming up, but I've got a really good human interest story. When you guys get back, I think you'll enjoy it. And then we will have Adrian Togaray as our guest tomorrow. Shane, the Wolf Trader himself, will be on Wednesday. Janet Yellen will be on Thursday, and Friday will be Ben Bernanke. And if you believe that, I still have 2 shares of the Brooklyn Bridge available for your purchase. We'll be right back, folks.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart for the November 2021 soybeans, as Mr. Z asked us to do. As you can see here, we have three major expansion numbers going back for a long ways. One is the 1.414 number, square root of 2. And if we look at 1.618, you can see that's off the July high. 1.74, I don't use that one, but it's close enough to 1.618. You can see there's almost a double high there. And then you have the 382 pullback that happened in October. We saw that in several of those things that told us it was probably going to go a lot higher. And we've completed that big ABCD up there right around 1060. That's equivalent to $12 in the nearby. So there might be something up in here, but the news is, like I mentioned before, is very, very bullish. And when the news continues to go with what the market is doing, then you got to do it. But if that market stops going up with bullish news, that's the key thing you want to know. You want to use that market feedback to tell you if that's the case. Now, the human interest story. Over the weekend, I got a phone call from a student going back to the old Pismo Beach, San Luis Obispo, 30-some years ago. He was a young fellow. He was a session musician. He was a friend of Kent Duncan, who was one of my very good friends in the Japanese yen trader. And Kent was, he owned Ken Dung Records. He had 112 gold and platinum albums. He was the engineer to put all the records together, you know, and the sound mixing and all that stuff. He was a genius at it. And this young man was a session musician for Kent, and he was from the hood. He was from South L.A., and he had finished high school, but not at a very high level. But he was a savant, folks. He could play any musical instrument. It didn't make any difference. And he could read music, but you know he wasn't. He didn't. You know he wasn't any. You know really what we call a master mathematician. Well, he started, you know, trading the euro back in 1990, 1991, and but he came up to San Luis Obispo and Pismo Beach to spend a couple days with me, a couple different times, and he was always a fun guy to be around. He just had a great sense of humor, but he could play any instrument. And on one particular trip, he was playing for one of his buddies who was getting married. He was in a little three-piece band he was setting in, and when they got there, one of the pieces in the band didn't show up, so he had to do the whole thing. I mean, he was just incredible. He had that whole audience at his he was just fabulous at what he did, but he could play anything. Didn't make any difference what it was. The piano, saxophone, harp, it wouldn't make any difference. He could play it perfectly. Anyway, he found a significant other, and he had been living in London for these past few years, and he called me and just to tell me that he's still doing the most boring job in the world, and that was trading euro. And he said, in the words of Don Adams, and loving it. So it was great to hear his voice. And anyway, that's what we're watching here today on some of these things. Now, the U.S. dollar, folks, is at a very critical level. I showed you the importance of that in that chart, that we're right at that level. And if we go below this level here in the U.S. dollar, something big is happening. You know, there's a game changer out there. Maybe it's related to cryptocurrencies and blockchains. I don't know. But if we get below that 91 level, 91.20 in that U.S. dollar, that's going to be very, very negative. And right now, the euro is trading at 119. If that euro gets above 119.50 to 119.70, I would think that would be the trigger mechanism to say, yes, there's something probably, you know, going to be happening. And remember, a lot of these currencies, you know, are incredible patterns. If you remember last week, we were just standing there checking with the Australian dollar, New Zealand dollar for one of our friends over in Australia. And you can see here that it's still setting at the 50% level. It's been here for 3 days now. And so this is a very tradable. You can see the three drive to a top pattern that we had in June. Then you had the Gartley pattern that happened in October. And that pattern on that Gartley pattern measures to pretty close to where we are right now. But this is going to be real critical where we are in the dollar. This is right over a holiday weekend. The rest of the world doesn't celebrate Thanksgiving, but this is going to be really interesting. So pay attention to that. That's very, very important. Whether that has anything to do with the gold position or anything, I don't know the answer to that. We were short the euro up until last night around 9:30 when we went back to our break-even price at that 85, 108, 118.85, and so we decided to stand aside to see what happens, and then we'll move on to the next one from that level. So that's what we try to do when we're watching these things: protect yourself on the backside. The front side will come in as it's supposed to, and that's what you want to do. David posted a great quote from George Soros: is focus on your winners and worry about your losers the most, and you're going to be fine. It's not whether you're right or wrong that's important. It's how much money you make when you're right and how much money you lose when you're wrong. And those are the words of Trader Tom. And Tommy Terrific was going to be our guest on our live trading session that we're going to have in December, along with Jim Twentyman. They're going to be on for just cameo appearances. Most of the time we're going to be doing trading to make some money. And also I'm going to be using the AI program to show the folks how they can use it themselves at home, and you'll be able to get some ideas and how to do some of these things. It's short term, but gosh, it works, and that's the whole key, is to try to get the odds in your favor, and that's what you're really trying to do. Let's switch our methodology over here to the copper market, folks. We've been watching this because some of our friends here at the Den are very involved with the copper. And as you remember here, we made that third high up here at the 330 level. And then what we've done here over the last day or two from Friday to tonight, we've really backed off very little, folks, just 4 cents. It's a very minor. I still think it looks like we're heading up to that 1.618 level at 3.34. That's what I would be assuming. Now, if we get back below, if we drop another 3 cents to the downside below 324, then I would say this chart is probably not right, and you're probably going to be headed down. But right now, that copper, it's still in an uptrend. You got higher bottoms, higher tops, and that's what we're paying attention to. So give me 1 second here so that I can hold on. We got another potential caller coming in, and we do have someone from Kansas. Robert, are you there?
I'm here, Larry. Good morning.
Good morning to you, my friend. What can I help you with?
A couple of questions for you. The first one is, I guess, do you need to finish off your copper and you want me to hold?
No, copper is all finished, my friend.
Okay. Have you covered natural gas this morning? If you had, I'll just listen to the archive.
I have not canceled it as of yet, but boy, I really believe that natural gas is, I think we've completed the pattern. If you give me a second here, I will bring it up here so you can take a quick look at it, but it certainly looks like it's completed the pattern. I'll get this up here so you'll be able to take a look at it. We're very close. That's the whole key. As you see, that is this is the December contract, and we got down to 252. We're now trading in the 270s area. That completes the ABCD pattern. We missed the 1.618 expansion by about 2 cents. But I think that we're getting close in the natural gas, and one of the things I was watching today is to see if we get a little bit of a pullback, or we wouldn't have to risk very much. But I think I saw that you posted for the UNG. That's the I believe that's the ETF, correct?
Yes.
Stay with us, Robert, and we'll look at this ETF when we get back. Okay. 877-927-6648.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and we're talking from Robert in Kansas. Robert, I posted that UNG, that's the ETF for natural gas, I believe, and we're trading at around 10. Robert, that's a Gartley pattern, my friend, and I think it's a buy. That's basically what it looks like to me. I don't know anything about the fundamentals, but that is a flat-out Gartley pattern, and it matches up with what we're seeing in the natural gas futures. So to me, it's a buy with about a 70-cent stop would be my guess.
Okay, great. I was just checking. I know you were thinking that maybe natural gas would back down to 246,
yes,
247,
246
in that range. And I was wondering, go ahead.
We only got to 250, so I'm assuming since we rallied 28 cents since that point, I would think that that's probably the bottom is in, because that was the ABCD. It just missed the 618 by a hair. So, and that's what I'm watching anyway.
Okay, and I have one other question if you have time. If not, I can take it another time.
I sure do. Go right ahead.
On gold, so we're backing down, and your perspective is we're going to back down into the 1810 or maybe 1750 type range.
Yes, sir.
At that point, do you think we're at a good strong bottom where we'll an intermediate or long-term bottom, or do you think that's just a stopping point and we'll continue farther down?
Well, you're asking for a sophisticated wild guess, and I can give you one. And I think the fact that if we get there, you're looking at that weekly chart, I'm going to bring this up again so the folks can see it because I think it's that important. If you look at this long-term weekly chart in the gold market, and we'll just get it up here, you'll see that at that point, we are going to be making a major ABCD correction. It'll be the biggest correction since December of 2015. It'll be coming at the 382 retracement of that level. It'll also be matching the old highs from 2020 before we broke out to go to basically 2100. So that's going to be major support there at 1747 to 1717 if we get to that level. Now we're $100 and some away, but we covered $120 a week ago, 2 weeks ago. So it could easily do that. And that's what I'm saying. And I think that will be a very, very bullish sign for gold. And the best part of it is nobody will want to buy it then because it'll be in a downtrend and yet it'll be making a perfect Gartley. And that's what we like to see. So that's what we're looking for. And believe me, it's really hard, Robert, because people ask me every day, where's it going to go? And I don't know. All I do is I look at that pattern and say, well, the odds favor that it might get there. So that's what I'm looking at. It's an old swag, and we all know what a swag is, right?
Right. Now, as far as the timing, are you expecting it to get there before the end of the year? When I look at the charts on gold, it seems like it has this habit of like kind of bottoming at the end of the year and then taking off again in the last week of December or early January. That's
right. Write this down. December 27th, 10:30 in the morning, New York time. Gold will make a bottom at 1717.
All right.
And then the other thing you do, Robert, is the other thing you do is buy a lottery ticket, okay, which would be a better bet than that one, and see if one of them works.
I'll do that and let you know.
I can't do anything more than that.
Well, thank you so much, and you have a great holiday.
Thank you so much, my friend. And if you see Toto and Dorothy, tell them I said hello, okay?
I'll keep a lookout.
Oh, yeah. Boy, did my kids, when they first saw The Wizard of Oz, they were like 4 and 5. And when it was over, they screamed and yelled at the fact that it was over, though they were actually throwing a tantrum. I'll never forget that. They loved it so much. And, long stories. Let's get out of that and talk about some of these markets. Folks, pay attention to this U.S. dollar index because it's broken below 92 now. And we got the euro above 119. And if this thing fails, just take a look at this Bollinger Bands here that one of our friends from Las Vegas sent us. It shows the fact that we're at the very edge of Bollinger Bands now, and we just went a little below the 92 level right now. So this is either going to be a trap because of that long-term weekly 618 there, or this thing's getting ready to come unglued. And if the euro gets above that 119.70 level, folks, I wouldn't want to be short. I don't know where the money's going to go. It'd be like, which is the cleanest dirty shirt in the laundry? I don't know. It could be blockchains. It could be anything. I don't know. It might be gold. It could be anything. So just the fact that dollar starts to weaken, pay very close attention. That's a monster number there at 91.20 in the U.S. dollar index. Now, if it just tags that and then doesn't go any down, then we've got a really good move to see what's going on. So, yes, there's a lot of news about the different vaccines that are coming out and everything. And so, like I always say, just be careful of everything. That's the main thing that you want to be doing as you look at these things here. Okay, let's move on here. And, oh, my goodness, only 3 minutes to go. Tomorrow we're going to have Adrian Togaray, as I mentioned. And then on Wednesday we will have Shane, the Wolf Trader, will be on. St. Smolian will be on. I wanted to show you the one chart. I posted the chart about the wheat. Here's a chart that Sarah and I used to follow. Oh, this is 15 years ago over in Hong Kong when it first came out with this young man named Jack Ma. But look at this. This is a 4-hour chart on Alibaba, folks. Look at the incredible patterns that are here on this chart. This is a 4-hour. Look at the arrows point to the 3 drive to a top pattern coming in exactly where it was supposed to come in. And as you look at that third arrow, you can see that there again, over the last, from October the 7th to the 27th, that 10-day period, it made another 3 drive to a top pattern. So you had a double confirmation that was going to be important. You had double ABCDs up there. And, we've had a tremendous breakdown. And look where we stopped. We stopped right at the 61% retracement to the tick. And now we've had a pretty good rally. Now, what's happening now is, we could be making this 135 pattern in Alibaba. You can see for the third red arrow, you come down, you make a 61% retracement. And what we've done now is we've matched that retracement, that little 3-day rally. We've definitely done that. So Alibaba is basically in a bear market right now with those, lower tops coming in here like that. So it's an incredible market to trade, folks. I mean, it's not trading for 50 cents a share. This is a, pretty big handle on this thing. So it does trade markets trade very well, so make sure that you pay attention to it. That is the BABA chart. That's the way they do it in. If you notice at the top of the chart, it shows BABA 1, but that is the Alibaba that they trade with the European stuff. So that's really what I'm looking at. I think the BABA chart looks the same. I never even checked that. I just assumed it because his work is so impeccable that, I ought to do that. Just during the break, I'm going to check that just to be safe. I just assumed that it was going to be right because all the other things he sent me are correct. Okay, let's quickly take a look at the markets here. We popped above the 382, folks. This is the first time we've done that. Remember, this is a really key level. Let's pay close attention to it. You'll see it right here. This is what we were just talking about. Get it right up here. You'll see it. We just popped above that 382 for the first time. That tells us that this market has turned bullish, and it was a bear market. We had those three retracements. The last one that we had this morning when Tommy was on the air, we backed off to exactly a 50% retracement, and that tells us we're going to 3,600, boys and girls. 16 handles from where we are now. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I posted the gold chart. We've had a $20 break here since we started the show here. And if you remember, if you belong to the 24/7 folks, we said to sell the third contract short at $18.48 on a stop. And then you had to risk $7. And I said, once it starts down, put your stop back at break even now at 18.48 in that second position. Don't get out all of them. Just get out of the third one because you don't want it to reverse. You don't want to be triple short down here in case the market would correct down here. But right now you're short 3 and hang on. So your stop should be at 18.48. That's where the third one was put on this morning. And now you see if it starts to run. It may or may not work, but that's how Tommy Terrific does it, and we're trying to follow the footsteps of the master, so we'll see what's going on. So that's pretty good. We have a $110 lead in the first one. We've got a $50 lead in the second one and an $8 lead in the third one, so let's keep our fingers crossed, and may the trading gods be with us. And maybe it'll work, maybe it won't, but there'll always be another bus coming by, as old Grandma Pez used to tell me when I started to move around the social circles around Terre Haute, Indiana. All right, folks, remember tomorrow we're going to have Adrian Tilgaray as our guest. Wednesday we're going to have Shane Smolian as our guest. Thursday and Friday are holidays. TFNN will be closed on Friday, and we'll all enjoy our families. Most people will not be traveling. This family will not be traveling, but we'll be watching our kids on Zoom like we always do. So let's keep those things in mind here. We got the end of the show coming up, so live every day in an attitude of gratitude, and may God bless, and try to do something for folks that have a lot less than you folks. And believe me, there's a whole lot of people out there that are out there this weekend. So be very, 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 very joyous and giving if you can. So we just broke 18.40 in the gold. We're down to 18.39.5. So let's see what's on. Remember, the stop on that third position is 18.48. Don't let it get back above 18.48. You don't want to be sitting there with a triple position in the darn thing rally. That's this is defense, folks, not offense. 877-927-6648. We'll see you on the flip side.